All right, let's jump straight into it. We're going to talk a lot of things about real estate this morning, and a lot of people are wondering what the heck is going on because 3 months there's been a lot of changes. We ended the year last year with inventory slowly going up. Election cycle almost over. People starting to think that real estate was maybe going to be more stable, including myself, heading into 2025. And in the last 2 months, we've had CPI reports come out that have been interesting. Inflation is maybe not at bay like we thought it was. The Fed has changed its tune a little bit, saying that maybe we're not going to lower rates as many times as we said. So maybe we just jump straight in there, kind of lay the landscape for any potential home buyers watching or any sellers watching, wondering, should I buy a house this year or should I wait another year? Should I wait 2 years? What's kind of going on? So I don't know if you want to jump straight into it. What about the Fed reports? Maybe that's a good place to start.
Yeah, I think 2025 will probably be just a decent amount of volatility in the market. You know, you've heard Trump say he wants the Fed to lower rates. He wants the dollar to become weaker. But the Fed I think they have their eye a little bit more on inflation and kind of the global macroeconomics. So right now, I think they're forecasting maybe 1 or 2 rate cuts for 2025. So it'll be interesting. So I would just say that if you're a buyer, I would just expect to have some uncertainty, maybe some volatility in where interest rates actually end up.
And that's important because a lot of buyers rely on interest rates for their home buying decision. And I think people put way too much weight in it. Do you want to touch on that, Abby, a little bit in terms of maybe take like someone in the $350,000 range who's saying, I want to buy a house, I've been renting for a little number of years, or I have a starter home that I want to upsize. Should I wait a year if interest rates are still hovering around 7%?
Yeah, I think that's a really good question. And I think it ultimately comes down to what a buyer is most comfortable with, right? So interest rates are always, they're ever changing. It's not something that we can probably always be relying on. So it's really important to make sure that when you're starting to have the itch to buy a house, really sit down with the lender and talk about, what's best for you. I think we've always said it, we just shouldn't be relying on the interest rates because they are, always changing. So, but I think, if you feel confident, ready to go, I think you should be able to do it. I wouldn't always rely on these rates, so.
Yeah, I think the biggest thing with housing is housing as a whole is an asset class that you get to enjoy. It's not like buying 200 shares of Amazon and seeing the growth over 10 years, which is awesome, but you don't see that reward until you sell Amazon or until you, versus a house. You live in the house for 3 or 4 years or 5 years with your family. And so waiting for interest rates is almost like putting your family on hold for a year or 2 years and saying, I just think people put too much weight in it. And we've also looked at the equity piece. I mean, no one can predict the markets. No one can say over the next 5 years, housing is going to go up 6% on average each year. But when you look at the history of things, and when we dive into supply and demand issues, what's actually driving pricing up, it's mostly inventory. Yeah. We're still at historical lows for inventory. And so when we say, hey, I don't think housing prices are gonna go down anytime soon because they simply can't, because there's always people buying homes. And on top of that, you've got a family that's growing, or you've got a new job or whatever it is. I don't know if you guys want to expand on that at all. I just think it's not worth waiting for a 7% interest rate to maybe drop to a 5.5 or maybe drop to a 6. Maybe saving you $100 on a monthly basis, but if your house goes up $25K in a year, you missed out on that reward.
And I think it could compound because if you wait a year, 2 years, we obviously don't know when interest rates could actually start to trickle down. You're looking at appreciation in the home price. If it's going to increase 3 to 6% a year, and you could be looking at a house that's going to cost you $10,000 to $25,000 more. Also, if you're waiting, what else is probably all of the other people who would like to move? They're all waiting. They're all on the sidelines right now. So you might pay more for the house, but then on top of that, you might be in a very much more of a competitive situation when you actually go to want to actually get off the sidelines and start looking at houses. So you might end up getting into a bidding war And you might end up purchasing the house for $30,000, $40,000 more than if you just would have purchased it now, because you can always refinance.
It's a great point, because the minute rates drop a percentage, that's when everyone comes off the sidelines. Not just home buyers, but investors, people that have some cash built up and want to buy their first rental. It's not just, the family.
Yeah,
So
those investors, I mean, obviously we know there's a lot of massive investors who have cash, but there's also a ton of investors who rely on leverage. They rely on loans to actually secure these properties. And you have normal interest rates for an owner-occupant like most people, but then an investor's interest rate is going to be about 1.5% higher. So they're really kind of waiting for those rates to come down, because they're obviously trying to make some monthly cash flow off of it. Right. So yeah, that is a good point, that when those trickle down, you are going to have the average Joe who is also going to be wanting to enter the market. But now you have this investor class who has probably just been waiting for interest rates to come down, because that's their main tool to finance.
Right. I think it seems like every year we have these types of questions coming up from buyers, and I think it happens pretty regularly in November, December, January. And the question from our buyers is, should I wait? Should I wait 6 months to buy a home, or should I buy now? I want to buy in the next 12 months. What should I do? And I know we've talked a lot about this. I think the three questions that a buyer should ask are, how long are you going to live in your house? If it's less than 2 years, maybe reconsider, because it's a big investment. It takes time to move, takes time to sell. And on top of that, market may do nothing over 2 years. So how long are you going to live in the house? Do we think housing prices are going to go up? That's a huge question, because if we don't, that could impact your decision, although I still think you should buy based on your family needs. And three, what are interest rates going to do? And that is a question to ask, but it's the third question on the list. So you guys have any other questions? I think when we simplify it into those three questions, it makes the buying decision really easy, because if you answer the first two, yes, I'm going to live in the house for 3 to 5 years. Yes, I think housing prices are going to go up. It almost doesn't matter what interest rates do, as long as they're not 18% like we've seen 25 years ago. But I don't know if I'm leaving anything out there.
And we were just, we were spoiled, in the last 5 years. The pandemic had a lot to do with it. But, interest rates, they are a little higher than I think the average person would like. But a 5% interest rate is relatively fair. Yeah. Historically speaking, when I first bought my house, I think it was 7.75 back in 2008 when I bought my house. Right. And, the interest rate didn't stop me. I just think it's kind of the sticker shock of, we had so many interest rates, or so many people being able to either get into a new loan or refinance at 2.5%, 3%, 3.5%, but that was with the Fed having their interest rate essentially at zero, because they were trying to stimulate the economy. Right. And we're all short-term thinkers, short-term bias, so I think a lot of it is just kind of that initial sticker shock of like, 7%, they were just at 3%. Right. But that needs to be given context.
Yeah. Okay, so capping off this part of the conversation, Fed had a meeting yesterday, fairly non-event. What do you think? I mean, I know they've 3 months ago, they said maybe 3 interest rate drops this year. 2 months ago, a lot of CPI, a lot of jobs, stronger than people expected, which is actually a great thing for the economy. But for investors and interest rates, maybe less rates than we expect. You think probably one cut this year, maybe 2? Yeah. Probably hovering around 6 at the end of the year. I know it's tough to say, but what would you say? And the reason I ask is because there's a lot of people that are still hopeful for 5% rates. I think that's out of range for the next year. So for someone that's saying, I'm going to wait for 5%, let's kind of set the expectation of what we've seen, at least in the last 3 months, that's, hey, you're probably not going to see that for at least 1.5 years, 2 years, maybe. Right.
It'll be interesting. I think it actually could maybe go down into the 5% still, because I helped a buyer back in October, and it was right as the Fed actually started to lower their interest rates. It was the first time that they had lowered it this year. They lowered it by 50 basis points, 0.5%. And interest rates for home loans, they trickled down, and they secured a 5.875% interest rate. And then since then, the Fed has lowered the rates an additional 0.5% 2 different times.
And that was this year?
Yeah, and that was this year.
And they weren't a VA, they weren't a...
No, just a conventional loan.
That's awesome.
Yep. But then the market has, it's just kind of been weird. The Fed has since then lowered their interest rate 0.25 once and 0.25 again, but mortgage rates have went up. And I think it's because people who are investing in mortgage-backed securities are a little worried about inflation still, where if we lower our interest rate a little bit too fast, we might not actually be able to nip the inflation in the bud, so to speak, which is what I think is driving up the yield on the mortgage loans. So it'll be interesting, but I just think with what Trump wants and what the Fed wants, there's going to be a little bit of a butting head.
There is. 4 years.
Yeah, and he obviously uses social media and TV and just media in general to his benefit. So even if the Fed is a little cautious as to wanting to lower rates more, they're going to feel a lot of pressure from the administration to do so. So to answer your question, I would anticipate at least one or two interest rate reductions. Probably not until maybe the middle of the year, though. Maybe first half of the third quarter. But nobody truly does know.
Yeah. Well, let's switch gears a little bit. Let's talk about the sales side of the business. Because I think it's really interesting. And we're talking to a lot of people who maybe got into real estate a year ago, saw it's maybe not as easy as you thought it was going to be, especially in the year with the lowest number of home sales in history. But Abby, what can you and we can go wherever we want with this conversation, but from a sales perspective, you see people jump in, whether it's real estate or anything else. You go from a full-time job to zero promise of income this month. What's that been like, or what's been the biggest shift or learning lesson for you in the last 3 years that you've been doing this?
Yeah, so I got into real estate, I think, at the worst possible time. Everyone was telling me this was the worst possible idea that I could have been doing. But I had a lot of really good conversations with Sam. It was always an industry that I had always been, fairly interested in. So finally just decided to take the jump and get into it. Did not come without its worries and scares. Obviously, it came from a full-time 9 to 5, get paid bi-weekly, jumping into sales, which I had never been in before, mind you, doing it full-time. So definitely was nerve-wracking and a bit scary. But I think it takes a special person to be in sales, right? It takes someone who's willing to put in the hours, willing to put up with all the different stuff that comes with sales, not only just the business in itself, but the people that come with it. It's a lot. And I think if you're willing to bet on yourself and willing to really put in the work, but also team up with the right people who will also allow you to be successful, I think was super important for me in making my decision to get into real estate. And so Nest Group, Nebraska Realty has been very, I think, pivotal in being able to help get my business up and running.
Yeah, no, I think, and it's a theme that comes around a lot, and I hear a lot of successful real estate agents talking about how important mentorship was for them, including myself. I don't think I would have had the trajectory that I had without awesome mentors along the way. And I definitely saw that in you, someone who wants to invest in yourself, because no one's going to do it for you.
Yeah.
You have to make the decision on your own that I'm going to work the long nights for the first year and a half, 2 years, 3 years. You really don't know.
Yeah.
And once you start building traction, it gets easier. But having a mentor, having someone that has been there and can say, hey, it does get easier, or here's where you go from here. Mentorship is a huge theme. When do you think you started feeling confident in terms of, hey, I know that for the last 6 months I haven't had a guaranteed income, but it's not scary anymore? Because the first couple months you're like,
whoa, what's going on here? I think it really took a while to get my business up and running. I want to say the first year, every single transaction was so different. Mind you, and it was still a learning curve for me. So Sam knows I'm blowing his phone up at 9 o'clock at night saying, Sam, what would you do in this situation? So really it took a full year for me to really feel confident in myself. Yes, I was doing the work, but like I said, every transaction's so different. So you're met with new scenarios, almost every single deal. But it took it took a year, but I needed that year to feel solidified. because I went through, we've all had our bad deals, we've all had our good deals, but those bad deals are the ones that I've learned the most from, and it's been very helpful for me and my business. So it takes a while, but I feel like once you get over that hill, it's just like going to work again, right? So.
And you almost have to have the bad deals because you just don't know what you don't know.
Yeah.
And having those experiences just makes you all the better when you're guiding your clients on the next deals. And if you see that happen again in the next 5 years, you say, okay, I've been here. I know how to deal with this. But
and to add to that, I think there's multiple layers to learning the industry. To Abby's point, the first most pivotal one is truly just understanding the contract side of it. You have to be able to get through a transaction, guide your client in the right direction, not get them or yourself into a precarious situation. But then after you start to kind of tackle that side of the business, it's, okay, how do I actually attract new business? Right. So then it's the whole, okay, I need to hopefully have the right mentorship or the team that I'm on to actually help me grow my business, so I can continue to grow my business, attract new clients, do it in an efficient way. So you have to learn, what should you be doing during green time? What sort of sales activities should you be doing day in and day out? How should you be marketing your business? And if you don't have a marketing background or a sales background, those could be new concepts that you have to learn, which is, thankfully I had some of that in my background, but I still have to give a lot of credit to, Nebraska Realty. They did a great job of having those resources in place to help provide you a mentor to help you actually get through transactions and then give you kind of the blueprint and the framework for, okay, now this is also how you can catapult and start to build your business. Right.
Yeah, because first 6 months, probably the first 12 months, you're drinking from a fire hose.
Yeah.
I do think it'd be good to see if you guys agree with me, because I think there's a lot of people that jump into a sales business, whether it's real estate or insurance sale, whatever it is. I think a lot of people jump into it and they're so concerned with getting that first deal, and I was the same way. And I think if you could just focus on delayed gratification for the first year and just say, I'm just going to learn the business, you'll go so much farther in the long run than if you just chase leads and if you just try to get those deals. And you can kind of do both at the same time, but I think that's why mentorship is so important. And I just kind of think back to my experience. I worked a couple different part-time gigs, knowing that I may not have sales for the first year. And I got thrown into that position, so I was forced into mentorship, which was great for me. But I think if I hadn't had that opportunity, I probably would have been focused on getting sales and chasing leads, and you don't learn the business that way. So I don't know if you guys have thoughts on that. I think it's, for anyone that is jumping into real estate sales, if you can find an awesome mentor and just absorb for the first 8 months, just learn everything you can, shadow on appointments, don't focus on getting deals, just get by for the first 8 months, but learn as much as you can. I think that is what really catapults you.
I remember having this conversation with you because when you first started, you are very hungry for that first deal. You're like, where is it going to come from? How am I going to be able to generate this business for myself? And I remember having that conversation with you and talking on, just try and learn the business as much as you can right now. The business will come if you are able to learn it. So, and I think, it worked out, it worked out as it should have been. But there's always going to be that sense when you're starting out in a sales position, where's my next commission check coming from? It is scary, but if you have the right mentorship, if you have the right support, they'll be able to guide you to, success. So. Yeah,
and I think if you learn the first, you get the second. But if you don't learn the first, or if you start with the second, you don't necessarily get the first, which is if you learn the business and you really focus on providing the very best client experience, learning the best business practices from a mentor that has been doing it for 15 years, you're going to gravitate clients and buyers and leads, even if it's from open houses. If you just focus on chasing leads, you don't really know what you're doing. And you can still learn the business, but it's just, you're going to stumble through it a lot more than,
Yeah, I think that's another thing too that I struggled with my first year in the business is I wasn't treating it like a business, right? So it's really important to have kind of a set a set day. Like, what am I going to be doing from 9 to 12? Am I going to be lead generating? Am I going to be working on my business? Am I working, with my clients, what have you? I think it's really, really important to have a schedule each and every day, because the first 6 months, I don't know what I was doing each and every day, but I was trying to find that commission check. And I think that's what really, it didn't set me back, but I feel like I wasn't propelling, as fastly as I wanted to. So then, I was having conversations with Sam. He's like, well, what are you doing every day? And it's like, well, I feel like I'm doing all these little things, but nothing's really compiling or happening. So being able to, like I said, have structure to your day and run this as a business is super, super important if you want to find success.
Yeah, that's a great point. I think there's a ton of super good audiobooks that you could listen to that help you, Atomic Habits we've talked a million times about, but yeah, it's all based on kind of going, because goal setting isn't a bad thing inherently, but if you set a goal for 20 transactions, or I'm going to sell 20 homes this year, it really doesn't matter if you don't know what steps daily are going to get you to that 20 house goal. So to Abby's point, if you focus more on daily activity, you're going to see the results, and you don't even know what those results look like until you get into it. So has that been kind of your experience? Kyle came from insurance sales and has a successful insurance business and then jumped into real estate. So you've kind of seen both sides of it. You jumped into this business knowing I got to learn the fundamental side of real estate, already having a huge background in terms of financial markets and keeping up with everything we talked about at the beginning of this. But from a sales perspective, what's been the biggest change for you, or what are the things that you continue to build upon year after year?
Yeah, the biggest change is going to be product, the market, the language. But in sales in general, a lot of the same principles always apply. And it's to your point, and what you just echoed was it's your daily activity. We can all have a goal that's either attainable, maybe a little lofty, could be low, whatever it is, but to actually understand how you get to that is you have to reverse it. And you have to say, okay, if this is my goal, how do I actually get there? And you have to look at it from the reverse lens so you can start to structure your day, prioritize your activities, so that way you're actually on track to meet your goals. Sales in general, I think one of the big detractors for a lot of folks as to why they ended up leaving sales, even though they might have had the personality for it, was financial. If you're getting into a sales job and it's 100% commission, not everybody has that runway to actually have the time to build the fundamentals, to learn the business, to just have a better understanding as to how they should be spending their time. So I would give anyone who's going from a 9 to 5 to a sales position, one of the biggest pieces of advice I would give them is, try and plan before you do that, to give yourself that runway. Because I've met a ton of people throughout the course of my career you could just tell that they would be good in sales. They're very social. They have type A qualities. They get along with everyone. They're kind of a chameleon. They can have a conversation with a lot of different people, but they just financially, they weren't able to last long enough. Everyone has a different lifestyle, so they might be, they might have a higher monthly expense than others. So there's always context to it, but I think the part of sales that someone can really kind of help set themselves up with is figuring out what are my daily activities, what should I be doing, treat it like it's an actual job. Like if you are writing a job description for somebody, this is how you should be spending your time. Invest that into yourself, and then try and plan financially to give yourself a nice runway, a nice cushion to learn the business, because it is going to take time. Right.
Yeah, I think that goes back to what Abby said, which is, on top of planning out your schedule, understanding that everything with daily activity, if you work towards a set goal, expect that it's going to be harder than you set out. And eventually you level up, you figure out how this worked, and your capacity slowly grows. You can do, when you first did 2 or 3 deals, I remember how stressful it was and how exciting it was. Same thing for myself. And then all of a sudden you're doing 5 deals at a time. And you're like, how is 5 deals easier than 1 deal? Yeah. Yeah. But your capacity grows, you become more comfortable. Yeah. Switching gears really quick, and I think we're potentially running out of time here. I think the last topic for sellers in 2025, and just as a whole marketing discussion, what are you doing differently with your marketing, Abby? Because I know you've done a ton of video, you've done a ton of YouTube, and it's all pretty much value-based. It's all putting value out into the world, showing clients what they should be doing versus what they shouldn't, helping sellers understand the climate that they're in. Why is your marketing different than someone who's maybe been in the business for 20 years, who has a huge client base, but maybe isn't doing the same things that you're doing?
Yeah, that's a good question. I think it's just the world that we live in now. Like we're in a tech savvy world, and it's not enough just to be able to do your standard, put it on the MLS, it hits, syndicates to Zillow and what have you. It's not enough to do that anymore. So what I do differently is really try and use all the different marketing channels I have at my disposal, Instagram, Facebook, YouTube, because that's where most people are spending their time. They may not be looking for a house, but it's something that they'll come across. And so what we're trying to do is just put out the product to as many people as possible. Like I said, they may not be looking at that time, but I just think the more eyes that we can put on the product, the better success that we'll have. And so I've actually found really, really good success with our Instagram and YouTube page. I think more people use YouTube than Google now. I think I read some type of stat, which is really incredible if you think about it. So it's like, why would we not be advertising on YouTube? YouTube is a different beast though. There's a lot of intricacies with it, and it's a consistency game, right? So being able to constantly post not only just on YouTube, but Instagram, Facebook is super, super important just to stay up with engagement. But it's where I found most of the success. So I think a lot of agents are hesitant to be posting on these channels just because, I think it's also just kind of an ego thing too. Most people don't like being on the camera. It's a little bit nerve-wracking, but I think if you can see what these channels actually do for in your business, I think a lot more people probably would be doing it, so.
Right, well, and think about yourself. I mean, when you start, you may only be getting a couple views, and that's okay. But you've had videos literally get 18,000 views in a week. Yeah. And those are 18,000 people that saw a house that you had listed or saw information about the market that you're putting out there. Yeah. And it's only snowballed from there. Yeah, it's incredible. Like I said, I've had one person reach out from North Carolina, another from Texas, and I think another one from Illinois. They're not doing anything right now, but they're interested in moving to Lincoln or Omaha here soon. And the only reason they found me was because of my YouTube channel. So I would have never been able to have gotten connected with these folks if I hadn't taken the risk and started posting. Because it is a bit nerve-wracking just to go out and talk on camera, but it's just a new way of doing business. Yeah. So, do you want to touch on the proactive versus reactive approach to that marketing? Because I think to your point at the beginning, most agents and most realtors, the MLS is an incredible tool. It puts properties everywhere for us. It gives us access to all these different tools to put a home out there. But it's still a little bit reactive, where you're waiting for the right buyer to come and see your home. You're waiting for that buyer to come see the house. Where we're actively putting it out in front of as many people as possible. And I know to your point, you always say this too, we're putting it out before people think they might, before they even come across it, whether it be Zillow or MLS, or we're putting it out in front of people who may not be ready to buy a home yet, but it's at least got them interested. So it's so incredibly important to be active in this business, because there's just, look at it this way. So you put your home on the MLS, put a sign on the yard, pray someone comes by. That is only, we saw that strategy be okay in, a market, recent markets. The market's definitely changing now though. I think sellers do have to be a little bit more strategic in marketing their home. And so with that, you got to think outside the box here now. How are we able to
push this home and get as many eyeballs on it as humanly possible, well, it's through the channels of YouTube, Facebook, Instagram, all those platforms. So.
Places where everyone's already at. I think capping off that conversation, we hear it from sellers all the time, and specifically for sale by owners, because you just hear that, whether you have a buyer that's interested in seeing a for sale by owner, or you've run across someone that you like, when you're in the business for several years, you run into for sale by owners. And the conversation that I think is interesting is, it's always, we've sold our house on our own before, we can do this, it's okay. And that's not really the point. Anyone can sell their house on their own. You put someone will buy your house for cash right now, I guarantee you, and you're gonna lose $50K in a day. But the difference between your marketing and someone who's maybe not even using marketing to the fullest extent is, you put your house out there, you have 3 interested buyers in a week, versus with you putting it out on as many platforms and all the advertising techniques that you're doing, that 3 offers could be 4 offers, or could be 6 offers. You're doubling, tripling, quadrupling the amount of eyeballs on the property, which raises the amount of people interested at one time, and that's leverage. And that's the difference between, again, if you have an offer on a Monday and an offer on a Sunday, a week's passed between those 2 offers, so you no longer have leverage, versus if all those eyeballs came in at one time, or if you had both offers at the same time, you can negotiate, you can drive the price up, you can drive better terms, which makes your life easier as a seller, like all these different things that work into it. It's interesting how the landscape has changed, and now it's so accessible. You can post a video, and it takes time to learn how to edit these and make the marketing awesome, but like you said, you can get thousands of views in a week that you wouldn't have otherwise. So I know we're running out of time here. Final thoughts for 2025 market. I guess if you could kind of give your thoughts in a summary of where you think the market's going, and I can jump in here and tell you because again, at the beginning of this podcast, we talked about the landscape changing, and it seems like volatility is really high right now, which it's been for the last 4 or 5 years, but stock market was down in a crazy way. Nvidia lost 600 billion in market cap 2 days ago, and a lot of those stocks have already rebounded. So not even from a stock perspective, but the market in 2025, do we think overall things are trending upwards? Do we see inventory slowly rising? What do you guys think from comparing to 2 years ago, 3 years ago, where we've been at really low inventory levels? Do we see a shift?
I think we're going to see a more well-balanced market. I don't think we're always going to, well, maybe, we're always going to have some sort of, inventory crisis here. There's just not enough homes that meet buyer demand. But I am seeing more and more inventory come to market, especially here in January. I can't remember, I'd have to look again, but there's been an uptick. I think it was like 10% more inventory than last year already. So that's a really good sign. I think buyers are still going to have to compete for those well-maintained, well-priced homes though. They're gonna have to be ready and jump on it if they see that opportunity. But I think they can also have a little bit of a sigh of relief. A few years ago, the market was absolutely crazy. Right when I got in, I would go show a home. There's already 12 people there. You'd have to write an offer within the next 30 minutes to an hour. I'm not seeing that anymore. So that's really great news for buyers. Sellers, I think they still have the upper hand. They got what most people don't have right now. So they got the product, but I think they're going to maybe expect to be on the days on market just a little bit longer, because I think buyers are still so unsure of what they want to be doing. And I think a lot of that has to do, obviously with the new administration, interest rates, things like that. So I think they're going to have to be a little bit more patient. But yeah, I don't know. What are your thoughts, Kyle?
Yeah, I think 2025 will be, overall a good year. I think it might be a little bit of a slow burn until we kind of get some clarity as to how the market in general, whether it's financial or real estate. But I do think there's going to be some deregulation that's going on from the new administration, which will just kind of help promote innovation and business, just less friction to do things. And whether you like Trump or whether you don't, he's been consistent in saying that he wants interest rates to be lower, and that is kind of the ultimate driving factor for a lot of buyers who are looking to buy a home or sellers who are looking to sell a home, because they then have to buy a home. So I do think it might take a little time for just that dust to settle, but I'm pretty encouraged for the back end of 2025 to be. Could be. I think that's where it'll kind of showcase that 2025 was a good year. And then for real estate specifically, if those interest rates, they just kind of stay where they're at, just not go up, I think more people will just get more comfortable with it. Sellers who don't want to go from a 7% interest rate down to, or they don't want to go from like a 3 or 4% interest rate to 7. If we've been at 7 now for 3 years, I just think it becomes more the norm. So it won't be, I don't think sellers will be thinking about it through that lens as much, because it won't be something as new. And then on the buyer side, same thing. I think with interest rates being around where they're at for this period of time, they're going to get more comfortable with it. But I'm also just encouraged that we're going to see that actually start to kind of come down as the year unfolds.
Yeah, I think the word is stability, and I think that's what we've been missing in the market for 5, 6, 7 years, pretty much since 2017, 2018, when interest rates first started dropping drastically. And housing is historically something that is more of a traditionally stable investment, something that is predictable, something that you don't expect surprises from. So hopefully in the next 2025, hopefully in the next 12 months, 18 months, we start to see a little more predictability. As the dust settles, we see interest rates not changing as much, even if they hover at the same place for 6 months at a time, that's okay. So
I agree. And just kind of echoing what we said at the very top of the podcast was, if you're waiting, you're going to end up paying to wait, right? Because home prices, like Sam was just saying, they're going to, they're stable, but they continue to increase in value each year, depending on the market. But it could be anywhere from 3 to 8%, depending on the market. And if you're waiting, that's okay, but you're going to end up paying for it, right? Because your house is going to become more expensive, which means property taxes are also going to go up as well, because that's following the sale of a new home. And then you're going to also probably more competition, because there's more people who are thinking in that same vein, and then they're going to come off the sideline. They're going to want to enter the market, and now you're into that situation where A, the house is more expensive, and B, I'm going to have to probably go above asking. The question is by how much, because now there's just this new flood of buyers into the market.
Love it. Well, we are out of time, but Abby, Kyle, thanks for being here. We're going to try to do this monthly and talk about real estate and markets and home buyers, home sellers, everything that's changing in our current landscape. But thanks for coming on today. So,
thanks for having us.
Yeah.